Hello there, welcome to the Pipnotic Symposium for the 15th of May 2018. Today we are going to continue with our little process, and I'm going to discuss something incredibly important. Where's my mouse? And that is this one here, which I've just added to this list. This is probably one of the most important areas to focus on when looking for supply and demand. So we're going to spend the next half an hour or so discussing how we find areas of supply and demand that show strength. This can be really difficult because if you look at a price chart, let's go to, it doesn't really matter, let's just take maybe one that I haven't spent too much time on. Let's take the Aussie. If we have a look at this, for example, I mean, there are a lot of areas looking here on the daily chart. I mean, wow, this one looks strong, but did it hold? No. This one looks strong. Did it hold? A little bit. This one here is strong. I mean, why? And so we want to find areas of supply and demand that really exhibit strength in some way. And there are some pretty simple ways to assess this. And you'll find that if you're choosing areas to trade that are qualified using this very simple process, you're going to find that things are going to improve drastically for you. So we're just going to run through that, I think, here. My last account got deleted with my broker, which was a bit of a blow. So we're just going to start on a new one here. So this one's just running at the moment. So we'll just use this one for the time being. I have a few different accounts here. And when we've moved to Indonesia, currently most of my funds are tied up in crypto and stuff, and so I'm going to liquidate a lot of my positions there and move it over into a live account, and then we're going to use my live account. I don't know what it's going to be, maybe $20,000 or $30,000, and then we'll use that for this because it doesn't really make sense me showing this with a demo account. Okay, let me plug in my computer so it's not going to die on me. Good stuff. Okay, so looking at this, you see that, wow, we got a reaction here. Why here? We got a reaction here. Why here? There are some super interesting and simple details that you should be focusing on in order to find this. So what I'm going to do, I mean, I've used this for my analysis, and I'm just going to delete everything. So all of these objects I'm going to delete, then we're going to do our analysis from scratch. So delete like that. So now everything's naked and done. So as always, I'm gonna start on the higher time frame because we need to know this. We want to trade with the major flows. What does that mean? Well, that means that we want to focus on the major supply and demand in order to assess if price is going to be moving higher or lower. In order to do that, we have to look here. If we look at this, let's zoom in nice and close. You can see that, let me go like that so we get some good. So what you can see is you might notice that we have, let me draw, we have a low, we have a high, we have a low, and we have a higher high, because this one is, that wasn't very well done, but a little bit higher than that. Okay, and so because when price went up here, it came down, because price went higher than this one, we can connect these two lows like so. Okay, so we can draw a trend line, and the only reason that we're looking at trend lines is we want to be able to see, we want to be able to define a structure for price. I refer to this as market structure, and as a result, this will enable us to see when market structure fails or is no longer respected. So if we consider this for just a second, we'll connect this low to this low here. Then you can see that price left here, it went to the high, it came back down, it went up, and it came back down. You can see the price has actually pierced this trend line. And this is what I call market structure failure. And this is interesting because if there wasn't a lot of strength in this this accumulation just here, this is accumulation of short orders, then price would probably have reacted just down here. You can see that price left, It came to it, it tested it, but then price managed to move through it. So this was demand. This is demand because we managed to form a higher high than this. Let me confirm that this is the high 81.35, and this is a high 81.25. Okay, so this is just barely a high here. So you can see that for this we could go like this, mark off this area, this accumulation candle, as the area of supply that broke market structure, or caused market structure to fail. In market structure being this upward sloping trend line. Okay, what does that mean? Well, that means that we had an uptrend, and when price broke the trend line, it means that we're having a bit of a break from this uptrend. We're not in a downtrend. Just because price manages to go below this previous swing low here, it doesn't mean that we're in a downtrend. But what it does mean, it means that we are having a bit of a breather from this this bullish buying, this buying pressure. And so currently price is in a bullish consolidation. I call it consolidation because it just means that if price is consolidating, it's kind of going sideways. Okay, so we're still in an uptrend. We're just having a bit of a break from it. You can see price return nicely to this area of monthly demand, which is a big one, because we had a long period here where excuse me, we had no closes above this area here, and then price moved above the area of demand responsible for causing this horizontal trend line to break is this one here. So we could have put like a trend line around here, something like that, kind of nice and flush with these, and you can see that tested. This one went above. What's the origin of this move? It's just here. So the indicator's drawn that. This is where we send the reaction. Okay, good. So we'll see that. We see that, and you can see that we had first test, and this is the second test. So what does this mean? What does this pullback mean? Well, it means that this is the most expensive price we want to pay if price should come back down here. So price came down to it roughly, and it went below that, and it found the source, the origin of this this push higher, which caused this this market structure to fail. Good. So now this area of supply caused market structure to fail down into this monthly demand. So we draw that just like that. We don't do anything else. Then we go to the smaller time frame, and we have a closer look. So now we want to do the same thing. We want to be able to, in some way, define the structure of market, the structure of the market here. And we can use the same tools. So we have price went up, down, up, down. I'm just going to take the major swings just so it's clearer. So that's what we have. And so we look for the most recent swing highs and swing lows. You can see we have a high here, we high here, we have a low here. Did price manage to move below it? It did. And so we can connect this point with this point, giving us a trend line that looks like that. And this is not rocket science. This is simple trend line theory. Okay, this is nothing new. This has existed, I think, since people started charting instruments. But this is just a very, very simple trend line stuff. Okay, so you see we can connect these two. So we have the high to this low. Good. Now we've got this downward sloping trend line. And so what are we looking for here? Well, we're looking for two different things. We have a bit of a conflict here because you can see we have this area of demand, supply on the weekly chart. And this is the one that caused this monthly trend line to break. So this is price sensitive. It also took out this demand. And so we want to be a little bit careful selling towards the lows here, because we have broken this trend line. This tells us that price is having a bit of breather, but we do still have a bullish bias because we have this monthly trend line. We're just having a bit of a breather. And so ideally we want to wait for a weekly or a daily trend line to break, and then buy the demand that caused market structure to fail to the upside. So that we have a bullish trend on the monthly. We have a bearish trend on the daily, which is very, very common practice. You'll often notice that when the higher time frame is doing one thing, you'll see the pullbacks on the smaller time frame, which is what we're seeing here. We have a downtrend established here on the weekly chart. Okay, so that's what we have. So we have this trend line here. This is the area of monthly supply that broke this monthly trend line. This is the weekly supply within the monthly that caused the break of the trend line, so the origin of the move lower. And so now we go down to the smaller time frame, daily chart, and then we have a look at this one here. So what do we have? Well, we can do the same thing once again. Let me clear these up a little. Okay, so we have a high, a low, a high, and a low. We can't really do anything here because we don't really have any clear swings. We want to be able to attach our trend line to a very clear swing. So we have one here. I'm only going to draw the swings that we could consider to connect our trend lines to. Okay. Well, sorry about that. Okay, so in this situation here, we had a downward sloping trend line. Price moved below. So we could connect that. The trend line broke. Where did it break from? It broke from here. So you would be buying here. Price came to it. It went up. And we have this area of supply demand, which was taken out by what? By this area here. So this is where you'd look to sell. Price didn't quite make it. We came close. We came and we went down. And then you keep doing that. So we had another one here to here. Not a very nice area of demand here. You can see there's a lot of trading here, so we wouldn't consider that for anything. Price accumulated just at the highs here. And then we moved away from that. And so currently we have, on this time frame, we connect this high to this high. Remind me later. Thank you very much, Microsoft. And now we have a downward sloping trend line on this time frame here. Okay, so we have a weekly trend going down, we have a daily trend going down, and so we do have, as you can see here, we have a bearish bias here. So we go down to the smaller time frame. This is the 4-hour chart. We see what's going on there. If we look for those clear swings, you can actually see that it becomes pretty unclear. When you go on the smaller time frame, you go from here, very clear, nice big clear swings. You go to the 4-hour, gets a little bit unclear, and so this requires a little bit more work. But you can see here that we have something going on. We have a low, sorry, high to a low, a lower high, a lower low, and price went up. You can connect this to this. The area of demand that caused the origin of this move is around here. What does that mean? Well, that means that we'll expect price to come back down here to the 74.60 area and then continue moving higher to these other areas of supply here we have to the upside. So this is good. I would have actually I like this because you can see that we have a low, we have a lower low on the oscillator. You'll probably see something a little bit different where you'll see the strength going for, we'll have a low here, then we'll have one that's a little bit higher here. You'll probably see kind of this going on like divergence if you're using the histogram, which will tell you that this area down here was like a final push into the area of demand to the left. So that's very that's something you can definitely keep your eye on. So that's what we have here. Then we can continue going to the smaller time frame. So what do we have here? Well, here we have, I'm just going to draw them in first. So we have this. Okay, so then we got that downward sloping trend line from here to here. Good. And what we also need to do here, we need to identify areas of demand that took out supply, as well as the opposite. And so here you want to find valid areas of supply and demand. You see we had a low here, tested once, twice. Actually, this is a better one because we had a better release. just going to mark this off like that. Okay, so here we have an area of demand that's tested once, twice, 3 times, 4 times, and then boom, then it went down. So you can see that the area of supply, let's zoom in, that caused this break is, we can't, was actually this one here. It originated from here. And if you look at this, you can see that this is kind of, it's a nice pattern, but what it isn't, it's not supply, because this is just a reaction to this here. So you could actually move this up to something like that. Price has already been back to this area if you look here. So again, you're going to have to look a little bit further. And so what I'm doing, I should maybe think out loud. What I'm doing actually is I've identified an area, and then I'm just running through the checklist, the quality checklist in my mind, which also refers to, where's my mouse? I'm on 2 screens. Okay, so where has price been? Not focusing on current price, blah, blah, blah. Okay, so what I actually am doing now is I'm looking at this, where price has not been. I'm looking for an area where price has not been. And of course this here as well. Okay, so here you can see that, yeah, this is a typical test of something and then a release. So this is not supply. This is a test of supply. We have the supply here. Go like that. Has price been back to this area before? It has, there. What does that tell us? That means that we've got to keep looking. So we have child. We have something here that looks a little bit more interesting. So this is kind of where it came to. But if you look at all of this, you can see that actually price, I mean, this is a nice drop. We have a couple of tests and then price goes back. And so this area here has been taken out by what? By this one here. So we're going to go like this now. Okay, let me zoom in. We're going to go down here like that. You can see the price went up. We have the low right there, so we'll put it on the low. That's the test of the area. And so now we have price kind of struggling to move through that, but probably at some point today price will move through it. And then what do? Then you find the area of supply that took out this demand. Okay, and this is what we have. That's what we're looking at just up here. Let me zoom in once more. You can see that we have our downward sloping trend line. We have an hourly downtrend. We're just beginning to feed into this area, and if we go to the smaller time frame, you'll see exactly where it is. You can refine it. There it is. This is where price came to, and so now we're nice. It's also the like a psychological area, a big round number, and so price is testing that, and we're going to see exactly what's going to happen. Okay, so now we're reacting at this hourly demand. So now we've marked that off. Let me remove all of these indicators so that we're forced to do everything ourselves, because we've got that. Okay, so price has formed this top. It's come back down. We're testing the area of demand that caused the break of that over here. Okay, so that's what we have there. And now we go to a small time frame. We go to the half-an-hour chart. What do we have? Well, we have the same trend line on the half-an-hour chart, so nothing really changes there. So you want to look for areas of demand here that have taken out supply. So I'm going to do that quick. So first of all, you want to identify an area of demand that's been taken out, and you can see the way I'm finding this is I'm looking for nice reactions. I want to see price poke into an area, and you can see that price poked into this area pretty nicely. What does that tell me? That tells me we have a lot of interest in buying here. This is kind of a shortcut way to find these areas. So you look like that. Price came close, tested. Now it's gone. This one did it. And this kind of brings us to the exact same area where we were on the hourly chart, you remember? Where this is kind of the test of the supply. Price has already been back here. This is kind of the release, the test, and then price left. We tested it, we took it out. So actually the half-an-hour chart would leave us with the same information. So we can just remove that. But what we can do here is we can have a look at a trend line. Let me zoom in a little bit more. And you can see that it's not very clear here on this time frame, but you can see that we had a low, high, low, and a high. So let's go to the smaller time frame and have another look. And you can see that we have, if you look at this, I mean, you could draw a trend line on it, but I don't like that because it's too messy and ugly. But what we can do instead, we can draw a downward sloping trend line from just like the most previous swing high here. Just put it anywhere to here. And now we have, what do we have? Here we have market structure failure, and this is the origin of the area of demand that took that out. So we're at the 75.09 area, and price is getting close to it now. But notice just in here, the price poked into here to the hourly area, and then it released from there. So we want to go and have a look in this wick just here. Okay, so we'll do that now by going onto the smaller time from the 5-minute chart. We want to make sure, come on, we have clarity. Do we have clarity? Now we can start to see clarity. You can see that we have a wick, price came down, it's pointing to the edge of the area. So now we go like this. We have a super tiny area, 2 pips, 2,556 lots. Jeez, insane. There's an expression in Danish where you say like, in Danish it's like a tak for kaffe, which ultimately means thanks for the coffee. And you often say that in relation to situations like that when something like really crazy happens, like, wow, 2,500 lots, and you'd say like, thanks for the coffee. And so that'd be a good opportunity to say thanks for coffee. Thanks for the coffee, right, okay. And then we have this, which is just at the area, 2 pips. And then if you want to get really down and dirty, then you have a closer look. And this on the 1-minute chart, and you can see that we're just confirming that. So what does that mean? Well, that means that you could likely expect a reaction down here at the 75.05 area, 75.06, because the area is established. We poked into this. Let's mark it off, and we're going to go left and see exactly what it touched. Maybe one day. There it is. You can see how price came down and it came up, and we were pretty close to these lows, these wicks here. We had price come up, tested, came up, tested, it moved through this one, and it came right down to this one here, which is pretty close to the origin of this move. So it just came to the lower edge of this kind of this area of this period of accumulation here, 1-minute accumulation, so very quick. And so we could see we'll probably get some kind of a bounce within this little range here. Okay, but keep in mind, I mean, what time frame? We're on the 1-minute chart, but what time frame did we start on? Well, we started on the monthly chart, and so even on the 1-minute chart, less so than on the major, on the bigger time frames. But here you can also do the same thing. So we can mark off high, low, high, low. So here we have our downward sloping trend line, like that. And now price is moving low, and you can see here we have a high, low, high, low, high, low. So we could actually have a more aggressive trend line that looks something, I don't know, something like that. And what you could do here then is you could wait for price to come down to this area, because we are in this hourly area of demand, so we're probably going to get a reaction around there. And you could wait for price to come down in and cause this trend line to break. And so when we have this market structure fails as a result of price not respecting the trend line, well, then this will enable us to, let me draw it in, to do something like this. Price comes down, we go up, accumulate, we pop through the trend line, and then you identify that area of demand as the one that caused market structure to fail, and that's where you buy in anticipation of a move higher. And I mean, now we're on the 1-minute chart, and so what you have to pay attention to here is maybe 3 or 4 time frames greater, because that's going to kind of be the trend time frame that you're going to be paying attention to. So you want to be trading in line with the half an hour and the 1 hour if you're all the way down on the 1 minute chart. Okay, and what direction are these ones going? Well, they're going very clearly down. Keep in mind that we are reacting to hourly demand, but I mean we have a daily trend line which is moving down, which means that price is probably going to continue to go down until this trend line breaks. When the trend line is compromised, well, then we know that we have a potential change in flows. And the trend line is the same thing as using the software, the truffle draw boxes above price. If you have boxes above price, what does that mean? Well, that means we have a supply that's overwhelming the demand. If you have the boxes below price, well, then you have demand that's overwhelming the supply or consuming the supply. So you want to pay attention to that. And the trend line is just a really nice way to help you do that. And you can do it on any time frame you like. And I feel, of course, more comfortable on the higher time frames, but you can do this on the very small time frames as well. I just think that when you go on the monthly, the weekly, the daily, and so on, then you really see these really nice clear movements as we saw here. And if you look here, this is so clear and fluid. And you'll find if you want to position trade and you want to use the indicator for that, then go on the monthly chart and no lower on the weekly chart and just take all the positions that the indicator brings to your attention. Trade them all. Let's do an example. Okay, we go here where there was one that was better. I was looking at one, I don't remember which one it was. Yeah, we can have a look here. You can see, let me look, make sure we turn these, show consumed. Okay, so we have, I mean the indicator is going to be drawing a line everywhere where there was an X. So we had an X here, we had an X here, price tested it. You may or may not have been stopped out on that one, but price moved in your direction there. We have another one here that was drawn, price tested it, it came a little bit deeper and it went up. We have another one here, price tested it. We have this one here, price has not been to. We have this one here, price tested it, not violated, went down. Have another one here, price didn't make it. Another one here, price didn't make it. So you can see, I mean that most of these are holding. We had this one here, tested. We had accumulation of short orders just above this area here, price cut it out. Why is it interesting to sell here? Because this is a supply that took out this demand. Price cut through it. Now we're moving sideways. We rallied, accumulated, rallied. Now we're reacting on this. Now price is feeding off, moving lower. And so you can do this if you want to trade on these bigger time frames. Okay, we have this one here, tested, held. We have this one's not tested. This one wasn't tested. We have another one up here. This is a really nice pattern here. I'm looking to sell because we have an upward sloping trend line. It's all been broken. We moved to the lower end of this. We had a continuation here, a rally, accumulation rally. This is the origin of the move that took out this. So this is where I think price is going to bounce at. We're trading against the swaps, which is a shitter, but we'll have to maybe see if we can get out of that prematurely. That's one of the blows against, about the longer term trades is if you're trading against the swaps and you're going to pay a lot of money. And if you're trading big positions, I mean, they can accumulate thousands of dollars a week or even a day if they're big positions. So you can go down to the smaller time frame here and you can do the same thing. And it works pretty similar. Here, a little loss, but this is also a terrible area because price is kind of moving like this. This is showing a wishy-washy area. We have an area down here. We had a bounce. We have this one here. We had a bounce. This one here, no bounce. This is interesting because this area was taken out by this one, so I'm selling here. Let's find something else where there's some interesting things going on. I mean, price is down, reacting to this weekly one here. But you can do it if you want to. There was one that was really good. Okay, here we had one down here. Price went up, it came down to it, tested it. This one was formed, price went up, tested it. Price went up, accumulated, we went up, we came down, we tested this one. It was taken out by this here. Price went up. We had this one here, price just moved through it. Price had this one here, moved down here. Price accumulated just above it, moved higher. We had this one here, tested. This one here, price went up, tested it, moved higher. Another one here, tested it. And so you can see that the majority of these ones are going to work out. And if you keep in mind that if you have, let's say half of them work out, which is realistic, very realistic, if you have a risk reward of 1 to 2, or at least 1 to 2, well, then you're a profitable trader. And so you don't have to do a whole lot. But you'll find that most of these will work on the higher time frames because they're major flows. I mean, would you be pleased about this? If you don't consider the swap for a second, we had this area here that was formed, price shot up, price poked down into this one, and then it just left, and it hasn't come back yet. I mean, there are thousands and thousands of pips to be made there. We have a look at this one here. This looks like market structure failure, probably on the daily chart, or the weekly chart. Yeah, so we have a low, high, low, high, price cut away. This is the area that caused it. Ideally you want to move through like this little area here, but we didn't get that yet, but we'll see if this one works out. But it's the same kind of thing. As you can see, we have this really nice area here which is not tested yet, but a lot of these are holding. This one, we had a bounce here, one bounce, two bounce, a little bit deeper. We had this one here which was probably would have been stopped out. Had this one here which was tested. This one here which was the low of it was tested. This one here which was tested here. This one was tested here. This one was tested here, and then we had a retracement. See, and so if you want to just kind of take the back seat, then you can do it like this as well, and do pretty well. This one here was tested. We might have moved our stop to break even depending on how we managed. This monthly area, nice test, nice release, 2 to 1. We have this one here which would have probably been a loss. We had but you get the idea, I think. And so a lot of these are working very, very nicely, and if you incorporate the where has price not been rule, then you'll do really, really, really well. If you're trading a line with this stuff and price is sitting around, so you want to be buying, let's say you get in at this area here and price is just fighting around there, you don't care because you're earning $3.85 Australian dollars per lot per day, which is really really good. And so you can just buy and hold. If we have a look at another one, this is nice. They're very interesting when they're sideways markets like this, where we had, if we look at this one here, we had this price went up, accumulated went up. We had an area here, price tested it. We had this one formed just above price. Price tested it, moved away. And so when you have areas of supply and demand looking like this, well, then you want to be trading only these ones. So you sell up here and you buy up here. Price has not been down here yet, and so when it does get down here, it'll probably attract some buying. When price gets up here, it'll probably attract some selling. Keep in mind that this is almost thinned out, but also keep in mind that we do have some market structure failure going on, the origin of which is up around here. So you could consider trading around the lower edge of this weekly area of supply. We look here, we had one trade. It's still moving in our direction, which is good. Let's do one more example where we have something. That's not a very pretty one. And so here, look at the most recent one. We had this one form. Price tested it. Price just moved away. We had this area of monthly demand. Price came into it, tested it, and left. We have this area of demand. Price tested it and left. We have this one here, which would have been a loss. Keep in mind, we have the high. We have the high. We have the low. 0% 1% probability, 10%. Or sorry, 10. 0 out of 10, 10 out of 10. And this is 5 out of 10. So this is a 5 out of 10. So if you buy here, it's kind of a 50-50 chance that it's going to work. So the closer you get to the origin of a move, the origin being here, and this is the distance away, the closer you get to 10, the higher the quality of the trade, because this is going to be closer to the origin of this move north, okay? And so you have your area probably around here, something like that. Price poked into it, and then price went through it. The origin, what area of supply caused this one to go? This one did here. So you sell here. Tested. Now it's gone. What area did it? This one down here. This one here is just, and you would never take this because it's way too close to it. If price would have gone through it and held and then come back, then you could have traded this, but it didn't happen. It's not a good one. So you take this one here. And price managed to trade and hold above. So this is the one that you would trade here, the closest to price. Do the same thing. We have an area here. Tested. This one here, this accumulation is the one that did it, that took out price. This is where prices kind of moved through it, but we had a small reaction from there. And so, yeah, that's what you actually keep your eye on. Good. Yes, that's pretty much. Let me see where these are. EuroCAD. I've already got that on there. That's in my Euro department. EuroCAD here. So I got that here. And so here I've just kind of marked off my chart. Yeah. Wait for price to move below the previous low. The previous low is this one here. Swaps moving lower, quite a lot as well. So we have some major flows selling. So if you go here to the monthly, you can see that price is really big. You can see that we have kind of a lot of, if you go to the weekly at least, you can see we have a lot of like rally accumulation, price is moving very, very high. So it's pretty far high in the curve. So what I want to do is I want on a daily chart this trend line, this low to be taken out, because then I'll be able to draw this. Then I'm in a downtrend, and then I'm gonna wait for price to retrace to an area. I'll show you on a smaller time frame. Let's say we go to, anyway, I don't know, I just draw it for you. So what I want to see in here at some point is want price to move. Here we have the low. Want price to move below that. Then I want it to go like this. So I can draw my trend line. Price to break the trend line. Qualify some supply. Then I want to do that and follow it down to maybe around here or around here, depending on what happens. But that's what I'm waiting for. First of all, step one, I'll just draw these in. I'm going to copy that. Price needs to move below the previous low. I do another one. This is 2. And here I want to see price to cause market structure failure on a smaller, smaller time frame. And sell supply. Come on. That's what I'm waiting for to happen. Yeah, so this is kind of the first one. Price needs to move below here. Once that happens, then I will look to sell the supply. But I think this looks pretty interesting, but I don't like the wick here. And so this is ultimately reacting at this. This is interesting because only because of the reaction we got on the first time. We did move above these highs, but we haven't taken out any supply here. Okay, we've just moved above this high, but this isn't supply. This is just a reaction, something to the left. If we have a look at what that could be. Yeah, we're just reacting at some like micro supply in here. Micro in that it's less than the current time frame, which is the weekly chart. So that's what I'm waiting for to happen here. You can see we had a really nice one. Rally accumulation, rally, demand, reaction to demand. Price comes back to it. Yes, that's what I'm waiting to happen. You can see we might get that pretty soon. We also have, this here is demand. And why is it demand? I'll show you. We had our upward sloping trend line. So we had our supply. It was tested. Doop, doop. And price went down. Where did it go below? It went below this one. Sorry, which area of demand took out the supply? This one here. Okay. And so now this is gone. The area that did it, here we managed to move through it, but here we closed through it. And close is just showing more of a commitment. So you can see we have here, which is kind of the higher risk trade. We've had a reaction, but you see price is looking to go higher. And here we have our upward sloping trend line like that. Maybe it looks more. I'd prefer if this trend line point was price move below that, which hasn't happened yet. So I wouldn't sell. I would prefer to maybe have a look at this just here, and I would want price to move into that, as we showed just a second ago, how we go like this price. It does something like this, kind of high, and this is this one here. So we want to go into here. So we have the trend line, and we move through it, and then I sell that nested area on the way down for a small trade. So that's what we're waiting on. So there's a lot of waiting when you're on these bigger time frames. I don't mind. I like waiting. I think waiting is just fine. And so yeah, that's what we have to wait and see. Here you can see there's not a lot of commitment, so I wouldn't really feel comfortable doing anything there. I'd wait. What we do have instead is we kind of have a bit of an aggressive. I'd probably go like this. We have this trend line. So what you could do is you could wait for price to move through this trend line into this area here, which will qualify an area of demand, the one that causes the trend line to break. And when an opposing area of supply moves through this, well, then you know where you have to sell. But you don't know where you have to sell until these areas consume one another. This is super important. This is why it's so important and crucial that you learn how to spot the strong areas of supply and demand. Because if you don't, then you're kind of guessing, and that's a bit of a pain. You don't want to guess, obviously. Good. Yeah, I think I'll leave it at that for the time being. I'll move that there. I think I'll leave it at that for the time being. But if this is making sense, super. If it isn't, let me know and I can reiterate some of the material. If there's something here that I haven't gone over that you want me to, please let me know. Yeah, and I think I'll leave it at that. The weather in Copenhagen is lovely. It's like, was it yesterday? It was, I think, 25 degrees Celsius, which is really nice. So everyone's running out in shorts at the moment, which is really, really nice. So that's cool. And we're busy getting our things sorted for Indonesia. The visas should be done this week, and our home is on the market still. And currently we have a bathroom, which is a huge hole in the ground. About a week before we put the house on the market, we realized that we had some water damage in the bathroom. So our whole floor in the bathroom has been knocked up, and now they're rebuilding the bathroom. So the new people will get a brand new bathroom, which is a good thing. But we don't have a bathroom. We haven't had one for over 8 weeks, so that's a bit of a blow. But fingers crossed. Anyway, I'll leave it at that. Have a super duper remainder of the week, and if you have any questions, please don't hesitate for a second to shoot them off to me. Thanks very much for watching.